Good afternoon, viewers. Yet another edition of the Commodities Complex from the house of Lotus Advisory Services or www.akshayashub.com on this Friday, September 20th, 2013. Herein I give a wrap-up of the Commodities Complex as it happened during the course of this week and the events that turned the tide in favor or against the commodities this week. Two events that shook the markets this week were the FOMC meet which happened in the US on September 17th and 18th and the RBI credit policy which got announced on Friday early this morning at around 11 a.m. this morning. The Fed announcement came after the meeting late day for Wednesday on Wednesday night on 18th of September after the markets closed. Ben Bernanke, the chairman of Fed, surprised the markets by announcing a continuation of the stimulus package of $85 billion per month as against what the markets had factored in and was expecting a marginal tapering down from anywhere between $5 billion to $15 billion per month. Now, as and when this decision was announced, the US dollar sank to a 7-month low and all of the currencies of the emerging markets rose sharply. So in overnight trade on Wednesday, the gold and silver flared up to new highs and when the markets opened on Thursday, gold rose from a low on Wednesday afternoon of $1,300 to around $1,360. Hit a high yesterday of $1,375 and now trading at around $1,358. A pivot is around $1,360. It trades below $1,360 could test up to the next support of $1,350. Now a rise above $1,375 could take it to new highs of $1,390 to $1,400 to $1,410. Wait and watch, and buying could come in at around the $1,350 as and when the US markets open later this evening. On the MCX exchange also, we saw that on Thursday morning, markets opened sharply higher on a gap-up basis both in gold and silver. Silver opened gap up at upper freeze and gold opened at around 3% higher. Now on the MCX, it's now trading at around the 30,200 mark. Strong support is now seen at 30,000 and resistance at the 30,550 mark. A break below 30,000 on account of any INR strengthening could test next support at 29,850. So the current trading range can be termed as between support of 29,850 and a resistance of 30,500. INR had a major role during the course of trades over the last 2 days. On Wednesday evening, as markets closed, INR closed at 63.30 rupees to a dollar. After the Fed announcements came when markets opened yesterday on Thursday morning, it rose sharply to a high of around $61.80 per dollar. The RBI announced its credit policy this morning, and the new governor surprised the markets by announcing a 25% basis point increase in the repo rate. As a result of this, INR weakened initially during initial trades up to a low of 62.5, but now stabilizing at around the 62 rupees to a dollar. Strong supports are now seen at 61.6 and 61. A resistance is at 63. A break above 63 could see further weakness up to 64 and 65. So, in terms of dollars, during the course of this week, gold rallied from a low of $1,290 to a high yesterday of $1,375, now trading at around the $1,358. Watch out for levels of $1,350 on the downside and $1,375 on the upside. A break either side could give the next move. In terms of silver, on the international market, it's now trading at around $22.70. Hit a high of $23.3 yesterday after hitting a low on Wednesday of $21.80. On the downside now, strong supports are now seen at $22.6 and $22.5 and resistance at $23.20. A break and close about 23.2 can trigger upsides up to 23.5 and 24. Mild weakness could be seen if it sustains below 22.5. On the MCX exchange, it's now trading at around the 51,000 mark. Resistance is very strong at 51,500 or more positive only on a break if sustains above 51,500. On the downside, supports could be tested on account of INR strengthening at 50,800, 5600 and 5400. 5350 is a strong support level below which further supports could be tested. So as far as bullions are concerned, watch out for movements of both the INR as also the international levels. Gold 1350 on the downside, upper higher end 13.75, and in silver on the higher end $23.20 and $22.50 on the downside. Watch out for INR strengthening also. If it strengthens, of course, although the dollar in dollar terms the bullions may go up, but MCX could be pegged lower because of INR strengthening. As far as INR goes, support is now seen at 61.6 and 61. Break below could test up to 60. The markets are now expecting further strengthening of the INR in days to come, and hence watch out for trades in bullions to be factored in as far as INR is concerned. Next we come to energy space, and the crude is now trading at around the $106 mark. It has come down sharply from the previous highs of 68.50 seen 3 days back to now around the 6600 mark, mainly on account of strengthening of the INR. Now immediate intraday resistance is seen at 66.46 and 66.70, and supports are at 65.70 and 65.50. Below 65.50, 65.25 could also be tested. Overall, so long as it sustains below the 66.70 mark, it appears weak, and sell on rises is the best strategy. Positionally also it remains weak. Positional resistance on a weekly basis is above 67.50, and a test of a support of 64.50 cannot be ruled out. Natural gas is trading at around the 231 mark. Strong support is now seen at 229. A break and close below 229 could see levels of 225 and 222 being tested. Resistance is now above 235. Next major upside can be seen only on close above 235. Wait and watch as far as natural gas is concerned for the said levels. Among the base metals, although in dollar terms all the base metals are holding at reasonably high levels, but because of the appreciation of the INR, all the valuations are pegged down. Copper is now trading at around the 465 mark. Strong resistance is now seen at 469.50 to 470, and support at 464. If INR strengthens further, supports could be tested downside at 464, 462 and 460. A break below 460 would test 458 and 456. Next upside can be seen on a close above 470 to around the 474 levels. Among all the base metals, nickel looks most positive as it's been gradually inching up. Tested a high of 897 yesterday, now trading at around the 885 mark. Strong support immediately is seen at 880. On a weekly basis, support is now seen at 868. Now, more positive to test resistance of 900. If sustains above, could test 910 to 915 levels positionally. Lead, zinc and aluminum are trading sideways. Lead is now trading in the range of 128 to 132. Zinc is trading in the range of 115 to 118, and aluminum in the range of 111 to 130. These are moving in tandem along with copper. Among these base metals, lead looks most positive. It's unable to break resistance or break the support, but due to the drawback in inventories in lead and copper, both of these base metals look most positive. Intraday trades to be watched out as far as INR is concerned, as this may have a major impact on all commodities across the board. Evening market today, not much of data is expected from the US also. So trade less and have a safe and profitable trading day. For further details, please visit our website at www.akshayaship.com. Thank you.